Okay, so now let's talk about how to achieve a double of $20 goal per day using what is known as the 10x recovery hyperloop. So the 10x recovery hyperloop determines what can happen when an entry is taken from an entry level. And we have two entry styles that will apply. So in one of the styles, we are going to use a converse of any entry to protect the downside of that entry while multiplying the lot size. So I will not be emphasizing that part since that part had already been demonstrated. So I'm going to be emphasizing the second type, okay, of taking the entry from a conservative entry level. So first thing is we want to know the sequence of price next target. So when price is observed to be at a fib zero level, fib zero being the starting point, there is a sequence of 100 up and down. Now, because in our order of sequence, we do not look up or look down. Instead, we invert our chart so that we can see left and see right. Now, in this sequence, there are points in between 0 to 100, okay? Either to the right or to the left. Now, this is like a linear scale. So we have a linear scale. At the middle of the scale, we have point 0. Okay. At the right hand extreme of the scale, we have 100. At the left hand extreme of the scale, we have 100. So it is plus 100 minus 100. Then between 0 and 100, we have other points. Okay. So now when price goes to the minus 100, that is our conservative entry level. When price goes to our 0.100 in the plus end, that is our conservative entry level. So the two sides are conservative entry levels because we can anticipate price reaction to the level before it gets there. So at 0.0, we are at a projection. All right. So now we have named them fib 0, fib 100 arrow, and fib 100L. Okay. So now I'm using the 100 now to tell you the points interval between 0 and to the arrow and to the 0 and to the L. So fib 0 arrow is 100, fib 0L is 100. So when we have our conservative entry level observed at fib arrow or fib L, the next thing is to position our entries, anticipating how price will react to the level. So the first thing to do is to place our limit order. In this case, at fib arrow, which is at the right hand side, we are placing a sell limit, while at fib L, which is the left hand side, we are placing what? A buy limit. So between buy limit and sell limit, we are going to have 4 entries. The interval between each entry will be 10 pips. Now, for us to correspond our desired risk amounts, okay, to get what we have identified as our goal of $20 per day, we have to, first of all, calculate how much will each entry generate when it moves the minimum of 50 pips. So that's, we are beginning with 50 pips when we are taking the entry, and we are going to start with the entry that is exactly on the fib 0, right, or arrow, okay, or L. That's to say, when price moves from fib 0 to fib arrow, we are going to place an entry at fib arrow, okay, knowing that the distance between arrow and 0 will be 100. Or when price moves from fib 0 to L, we are going to place our entry at L, knowing that the distance between 0 and L is 100. So this is the sequence. Now, when we see price has not got to either of fib arrow or fib L for the first time, we have the entry style that is called the projection towards arrow or projection towards L. That entry style is called sophisticated entry style. So it anticipates price going to either arrow sequence or L sequence. Okay. But at that point, there is no sustained momentum because price needs to get to arrow or L to choose a proper side for the day. So the distance between arrow and L will be a multiple of 100 divided at the middle by 0. Okay. So if you see now, we have a total of what? 200, but we are not going to take that 200 as a sequence. 100 is a sequence. It is the double of 100, okay, that creates 200. So it's still the sequence of 100 that is being repeated. So now when we have that in mind, the next thing is we place our entry at fib arrow. So fib arrow is always going to be sell limit, okay, while fib L is always going to be buy limit. It is us looking at how price will react to arrow or L to tell us where the next sequence will be. So now we know the middle point. All right, but where will the next sequence be? Will it be fib arrow, arrow, okay, or fib L, L? You can see now. So we will now have an extension of what? Fib arrow, which will now be another 100. So we now have fib arrow, arrow, okay, or fib arrow, arrow, arrow. You see now. So we'll be having a repetition of fib arrow if it will be in the direction of what? Fib arrow. So what we do when we have noticed where price currently is, we place our first entry at fib arrow or fib L. So let's now take it that price is going to fib arrow. So we'll place our first entry at fib arrow, which will now be a sell limit. Now, from fib arrow, we are now going to use the next nearest sequence to place all other entries. And the next nearest sequence will be what? 10. Remember, in our sequence, we have 0, 1, 0, 1, 0, 0. Okay, so the moment we have read 0 to 1, 0, we now know that between 0 and 1, 0, there are a replicated amount of what? 1, 0. You see now, so what brings price from fib 0 to fib what? 1, 0 is what? 10x of 1, 0. In other words, 10 times of 10. So you see, it's a replication of 10, 10, 10, 10, 10, 10 times. So 10 repeated 10 times gives us what? 1, 0, 0, which is 100. So which means that the nearest sequence from fib arrow will now be what? 1, 0. So at fib 1, 0, we'll be placing the next entry. Okay. Then the double of fib 1, 0 will place the next entry. The triple of fib 1, 0, okay, we will now place what? The next entries. That's all from fib arrow because we are focusing on fib arrow right now. So which means that we are going to have 4 entries. The first one will be at fib arrow. Then we'll now have fib arrow 1, 0, 1, fib arrow 1, 0, 2, fib arrow 1, 0, 3, and finally we have our exit. Okay, so the distance between fib arrow and the exit will be what? 5 times of 1, 0. That's what we call 50 pips. Okay, that's the exit, which is if price continues to go further from fib arrow, okay, it has to first of all go the first 5 replica of what? 1, 0, which is 50 pips. 5 times of what? 10. So what is repeated in the sequence is 10, 10, 10. Now that we have that information, we are going to determine the initial lot size to use. Okay, so because we want to mitigate risk in the first time that price is going to either of the sequences, or either fib arrow or fib L, we are going to use a minimum lot size for the first 3 entries. So the first entry at fib arrow will be with the first minimum lot size, that is 0.01 for every $100 traded. Okay, so which means that if we are trading $200, we are going to use what? 0.02. If you are trading $300, we are going to use what? 0.03. That is the constants. All right, so now that we have that information, at fib arrow we have the first entry 0.01, fib arrow 10, we have the next entry 0.01, that is 2 entries. Fib arrow 10 times 2 we have what? The next entry with 0.01, that's the third entry total. Then fib arrow 10 times 3, we have the last entry with 0.05. Okay, 0.05. Now, if we have that set up already, we now know that our exit will be what? At what? Fib arrow 10 times 5. Okay, fib arrow 10 times 5. That will be our exit. So we have entries all the way to fib arrow 10 times 4. So at the nearest to fib arrow 10 times 5, we now have our SL. So we use the lot sizes spread in that order and wait for price to react to the levels. Now, what do we also do? All our SL will not be at fib arrow 10 times 5. Instead, we'll be using the SL for the next level. Okay, so if we have fib arrow 10 times 1, that will be the SL for the fib arrow entry. If we have fib arrow 10 times 1, okay, go to fib arrow 10 times 2. The entry at fib arrow 10 times 1, we have what? Its SL at fib arrow 10 times 2. Okay, so which means that we are maintaining that sequence for the SL. The reason for that is to keep the loss equivalent to the lot size used. So which means that if we use 0.01, what will be lost when the market is not ready to move yet will be what? 10 pips or $1. Okay, for 0.01. So now the first time price goes into those levels, we are expecting it to go and clear the entries, then return back into the level. Okay, so as soon as price has taken out any entry, we'll repeat that entry. Okay, until it goes to the next entry level, then we repeat the entry that has been taken out. Okay, so we'll keep doing that until price moves back into the direction we are expecting or moves into showing our next fib sequence. You see now, so now that we have that projection, the second time we are taking the entry, we will now change our lot sizes in this order. Now, in changing our lot sizes, we have to be exact. Okay, now we want to calculate that because price has delayed in each entry level, which has caused us a number of times of losses, which also corresponds with the total expected what? Profit. Let's look at it. So at fib arrow 10, which is 10 in the first instant, or 10 times 1, which means 10 also, okay? We have the second entry. Okay, before price moves from the second entry to the third entry, it must have put the first entry on loss. All right, so putting the first entry on loss now means we have lost $1. Now remember, we are talking about our 10x recovery. It means that we are going to now be setting our take profit for the next time we are repeating 10 times 1 to be 100 pips. Why do we do so? We do so because 10 has been lost once. We want to recover it 10 times. Okay, so if price is going to return back to fib arrow the first time and then move from there into profit, we're expecting price to go back to where fib 0. You see now, so which means that price returning from fib arrow to fib 0 is equal to what? 100 pips, and that is our 10x recovery hyperloop. All right, but if price has taken us out at fib arrow for the first time, remember fib arrow has the minimum loss size of 0.01. Okay, while fib arrow 10 times 1, we have also 0.01 the first time, right? But the next time we are going to use 0.02. Now, we will only use 0.02 only after price must have gone to fib arrow 10 times 5 and is returning from fib arrow 10 times 5 for the first time. So what we are going to do to place that entry will be, since we are repeating only the entry at the level price is currently engaging with, and price doesn't just move randomly. Price moves in that sequence of going what? 1 0, 1 0, 1 0, 1 0, 1 0 to infinity of either 1 0 times 10, 1 0 times what? 100, or 1 0 times 1,000. I saying that. That is why we now have all the other sequences going 1 0. Okay, then we now have when 1 0 is replicated 10 times, that's 10x of 1 0, we now have 1 0 0. You see now, so when 1 0 is replicated what? 100x, we now have what? 1 0 0 0. You see, when 1 0 is replicated what? In this case now, 1,000x. we now have what? 10000. Okay, so we are now having up to 10,000 points of 10x, or rather of 10, which is 10. That is why we say in the sequence we have just the two digits 1 and 0. So all other points of price target will be what? Playing around 10 a multiple times, so repeating 10 or extending 10 as the case may be. So now we'll place all our entries with 0.02 from the fib 101, 0.03 with fib 102, okay, 0.04 with what? Fib 103. Then the last entry will be 0.05 with what? Fib 104. You see now, when we place it that way, as price is moving back, it's taking all the entries into our 10x profit target. Now, the difference between the first entry and the second entry is that we are now going to be getting a double of the second entry that goes with what? The scaled up lot size. Okay, so whatever was lost in the first entry, the second entry will recover it fully 10x and its own. Okay, so which means that if we lost 10 initially, or we made $1, okay, that's 0.01, lost $1, which we're supposed to make $10 from it. The next time we are going to be targeting making what? $20 from it. That's now doubling, and this is how we achieve our target of doubling the target or goal of $20 per day. So each time we take our entries with these fib sequences, all right, we are targeting making what? 10x with our entry style. So price is not crazy to go what? 10 times on a level before moving into the proper direction, from fib arrow to fib 0, or from fib L back to fib 0. So this is the first projection. Then if price is to break fib arrow or fib L, we start changing our direction to a new fib projection. Thank you. Now, how we mark our fibs? We have to look for the first two candles if it is green or red, okay? Then we place our fib 0 there. We now extend it to fib arrow or fib L. This is the simple secret for marking it. So anytime we see first two candles of same color at the beginning of the day, we have to place our fib 0 there and extend it to the arrow or to the L. So once we have done that, we now know the first two directions, okay, either to the left or to the right. Then we start doing our proper trend projection for the day. So this is agreeing with trend trading. Then we use our first entries, which are the conservative entries. We can also place either the sophisticated entries, which will be to move towards arrow, we place our buy. If we are moving towards arrow, or to move towards L, we place our sell. That will be what? Conservative entries. Or we'll now use what? High risk entry or conservative entries. Now we use the limit orders at arrow or L. Then the sophisticated entries will move towards arrow or L. Then high risk entry will move from arrow to L. Now that I've given out this lesson as I promised, it is time to apply it to your trading. So have your funded account, okay, with Primex funded, and then begin to place these entries in this order. Observe your fib arrow, or observe what? Your fib L. So start from your fib 0 to project to your fib arrow. You can play or place your entries using the word sophisticated entry order, projecting towards arrow or projecting towards L. All right, so now after that, you want to place your high risk entries. Once you have got your fib arrow and fib L, where is your high risk entry? Your high risk entry will be at the 50%, okay, of fib 0 to fib arrow, or fib 0 to fib L. So at those 50%, you will start placing a sell order if it is from what? Fib what? Arrow. Or if it is from fib L, you start placing what? A buy order, expecting price to go and retest what? Fib 0 before deciding to move in what? The sophisticated plan of going towards finally arrow or L. So try this and make money double or $20 per day. Thank you very much. So learning about applying the sequence to your trading. Let's be very, very deliberate right now so that you know the exact steps to take. Okay, so the first thing you want to take note of is, where is your fib 0? Because every change in price must begin from a 0 point. That means that the price will have to appreciate or depreciate above or below 0 point. Okay. Now, what does zero stand for? Zero stands for your entry point. It is zero not because the price of the asset is at zero at that time, but because at your coming, every move, okay, where price will change towards must appreciate by what? A number starting from zero. Okay, so either downward or upward as the proper market outlook is observable. It is either upward or downward, but in a sequence projection, it is either left or right. So the first thing is placing your fib zero, which is your own starting point, correctly. So where do we place it on our chart? All right. So now you just came into the market, okay? You are going to look for the most recent formation of two same color candles. So let's talk about first the significance of these colors before we go into pinpointing your fib zero, okay? So the significance of the red color is a tumbling effect, okay? It's already seen in the market, which means that the asset is losing value, while the green color represents a positive effect, which means that there is investor confidence in buying the asset, okay? While in the red color, there is loss of investor confidence, hence the asset is being sold. So the red indicates a selling, okay, effect on the market, that the asset is being sold off by a number of its holders, while the green indicates that the market is being bought by new holders. Okay, so it's either the market is reporting to you now that it is being sold off or being acquired. So the green candle, whenever you see it, tells you that there are those who are what? Acquiring the asset. So starting with this key point, okay, observing the significance of the colors, you want to know where, okay, a change of interest came in. Remember that we're talking about price and interest, okay? So you want to know where a change of players' interest comes in. So how do you note? First, there must be first a sustained move in any of the direction. So to see a sustained move, you want to see either two green or two red. So when you see two green, that has first of all meant that for so far in the time frame of observation, okay, there has been a sustained interest and you want to see a potential for continuity. So that is why you are beginning your projection from the ending of the second candle of same color. So if it is a red same color candle, you want to start from the closing price of the second candle, okay, which will automatically correspond with the opening price of the third candle unless there is a gap. So there could be a gap if there was a pressured opening. So which means that there was a pressured opening. Some new players saw that two color candles, okay, and came in with high volume. So that high volume upsets the balancing, okay, of the asset at that time. That is why you see that gap. So at the closing, so closing to opening interval, in any time from a gap could occur, and that indicates pressured, okay? So which means that why is there a pressure? There is a pressure in the direction of that opening, okay? So let's say the opening was what? With a gap to the downside, continuing in the order, okay, of those either selling or buying observed. Now it means that there is an interest in going downwards, okay? A continuing interest in going downward. Then if the gap showed a kind of change of plan, it means that there will be an interest in going what? Upward. If what you had observed were two red candles. So we've talked about the significance of the candles. The two red indicate what? Where price is what? Going down, or the asset is losing value because investors have lost confidence in its potential to go up, okay, or to appreciate, hence, or they have also reached a point where they want to exit on profit, so they are selling off. So first thing to note with the red color is a sell off indication. So the sell off indication is the red color you see on your screen. Then the green color is a buy in. Okay, so you're either selling off or buying in, and this is a report of what investors or traders or participants are doing. So when you have observed this, the next thing is to place your entry, okay, from where you are projecting your fib 0 towards fib arrow or fib L. So whenever you are projecting price going fib arrow, okay, you are saying that the sequence will move to the right hand side. That is a positive move, which means that there will be gain of interest. Okay, whenever you are making a projection from fib 0 towards fib L, you are saying that price will move to the left hand side. That is when you have inverted your chart, of course, just as you can see it here inverted. All right, so you are saying that price will move to the left hand side, which means that okay, there is going to be a continuous sell pressure. So there's going to be a continuous sell off. So you have already spotted a sell, then you want to see a continuation of the sell. All right, so at that point where you observe the closing of the second bearish candle, in this case we call it bearish because it is following the meme of a bear that puts its head down. All right, that's why it's called bearish. So because a bear puts its head down, traders see it as, you know, a worthy meme for when the market is going downwards or losing value. You know, we talked about rising or falling, that's in value. Okay, so the falling is downwards. That's why we're always using up and down. That's language expression. Okay, the price is losing value or the value of the asset has declined. Okay, so then when we talk about declination, we want to see falling downwards. So it's a language thing, but in a sequence projection, we are not using the fall or rise. Okay, we are using movement to the left or to the right because you want to order your structure in that way. Now there are three key points that are important in your first sequence observation or projection. Okay, the three key points are your fib 0, which is the starting point, your fib arrow, which is the first major sequence, okay, and the fib L, which is also an equal but the opposite, okay, of the first major sequence. And now you are at the middle. So your fib 0 tells you where you are at that time you marked your chart. So at the middle, which starts from the closing price of the first two or the most recent two candles of same color that you have just met as you came into the market. So the closing price of that second candle that you have just met. So wherever it is, as far as it has formed two candles already, okay, that is where you are going to start to mark your fib 0. So you just use an arrow line and place on the closing price of that candle, okay, the second candle of the same color that just closed. All right, so how do you know? The red color moves to the left hand side, all right, while the green color moves to the right hand side. So you know the second one when you see it. It's very clear to observe. Okay, so you just invert your chart so that you can see it moving to the left while the green is moving to the right. Okay, this is a disruption of the idea of moving upward or moving downward because this is for sequence projection. All right, so now what you want to observe is where you should place your fib 0 will indicate where you are likely to take your entry from for the first time. Okay, so now once you have marked price at your fib 0, the next thing is to extend your fib 0 to either your fib arrow or your fib L. So your extension will use something like an let's call it a triangle. So that's, you find it in your toolbox, you see the shape triangle, you use it. Okay, you extend your triangle to from the closing price, so it must, the first point must touch, okay, the closing price of the second candle you are using for your observation. Then you extend it downwards, okay, or to the right hand side, since your chart is moving from left to right. If you notice, your chart is also moving from left to right. In the same thing happens when you are using your tool. So you draw your tool to the right, not to the left. So starting from the most recent observation, you draw your tool to the right. Okay, so that is before you invert your chart. So you have to draw your tool. So place the first point of your triangle 2 on the closing price of the second candle and extend it to the right hand side. So once you have done so, you now have your first 2 points, okay, of your triangle. Now you want to project to the direction of your observed candles. So which means that if your observed candles are the red candles, which means a sell off indication, you have to extend it to the left. Okay, that's to indicate that price will do what? Move to the left hand of your sequence. That is your basic projection based on the type or color of the candle you have observed. Now if you have used a green candle for your observation, being that is the most recent observation, okay, from when you came into the market, then you have to do what again? Project from the point of the closing price of that second same colored candle to the right hand side first. Then having done so, you will now extend it towards the direction of the green candles. Okay, so when you extend to the direction, you should measure the 2 point. The middle point of your triangle should be what? Equal to 100. Okay, 100 points. In this case, now we are talking about 100 pips. Remember, in the forex market, we talked about we use pips. Okay, while in the other market we use points. Okay, so right now in the forex market we are using pips, so we are talking about 100 pips. So now you extend your center of your triangle toward the 100 sequence, 100 points of your sequence. That's 100 pips from point zero, or from fib 0 to what? Fib arrow. That will be 100. Okay, then that's when you have your two green colors, or you are observing a buy in, okay, projection. So you have just seen two green candles which form most recently at the time you took your at the time you came into the market. Then you draw your third or your center of your triangle to be correspondent with what? The fib arrow. All right, so let's say it's again something you can easily do. You have just placed your triangle 2 by extending the 2 points. You place the first point on what? The closing price of the candle that you are basing your observation on, and then you draw from that closing. If you notice, when you place your triangle 2, all the points are in the same place, so just extend it to the right hand side of your screen, towards the ending of your screen, okay, where you are seeing your right, the price is written. Okay, so just extend it to the last point there. Now I haven't done that extension. The next thing is to draw the third point. So you still draw it from the same point where you had placed the first point. So draw it from that first point up. If it's to the green, to the direction of the green candle, draw it to your fib arrow. Okay, if it's to the direction of the red candle, draw it to your fib L. Okay, so for fib L, you are drawing what? If for red candles you are drawing towards fib L, for green candles you are drawing towards fib arrow. Now the next thing is, now you have done your projection, okay, based on your observed candles. The next thing is how to take your entries. Now between fib 0 to fib arrow, there is an average price of what? 10 times 5 sequence, point of sequence. Okay, 10 times 5 points of sequence. The same thing also between fib 0 to what? Fib L. That is what? An average price, which is what? 10 times 5 points of sequence. So we can describe that as what? Fib what? Fib 0. All right, then you put your hyphen, extend it 10 times 5 L, which is going to the left because it has not reached fib L yet. So it's in between fib 0 and what? Fib L. The same thing when you are doing for the right hand side is also in between what? Fib 0 and fib arrow. So the 10 times 5, which means that the 10 points of sequence multiplied by 5, that's the average price. We also call it 50 pips, okay, to the right hand side, or 50 pips to the left hand side. So now when you mark those 2 points, you can begin to have your first entry projection from your 50 pips deviation, okay, from fib 0 either to fib arrow or fib L. So now you have got middle point between fib 0 and fib arrow, and middle point between what? Fib 0 and fib L. Remember that this middle point is also a constant, just like your fib 0, okay, and then your fib arrow, and then your fib L. Their average prices are always there. So no matter how the market moves, the market must always recognize those average prices. So your own job is to do your first projection. So use a horizontal line, okay? Or instead of using a horizontal line, use what? An arrow line, and mark where you have your fib 0, 10 times 5. Okay, fib 0, 10 times 5. That is where your average price is. So which means 50 pips from fib 0 to fib arrow. Okay, so 50 pips between fib 0 and fib 0 and what? Fib arrow, you place that. So you must have the two sides marked. Then 50 pips from fib 0 to what? Fib L. You should also place that there. Now, once you have placed your two average prices looking towards fib arrow or fib L, remember, at the time you are doing all of this, price is currently moving to any of the directions from fib 0. You have not taken any action yet for entry. You have just taken the first step to mark, so that you can clearly observe how price will react to the both side. Now, wait for price to choose a direction. Okay, so that you have already marked your fib 0, which is a starting point, does not mean that you are taking your entry yet, because you do not yet know what the direction price will settle. So the first thing you want to do is, well, why your fib, if your triangle 2 was projected towards fib arrow, your own primary expectation is for price to settle what? At fib arrow. That's your primary expectation. Okay, which means that you'll be having an interest to buy the asset, because what? You were doing your projection based on what? An observed what? Buy in candles. Okay, two green candles means what? Buy in candles. Then if you expect that price will sell, it means that your observation was what? Based on what? Two red candles. Those were the two most recent things you observed that you use as your starting point for your fib 0. Remember that. Okay, so everything begins from fib 0, then moves. And remember, this is a constant, which means at any time you come into the market, you would look for those two most recent, which means that if you have selected any two, you will not find any other two of that same kind after it. So it should be the two most recent newly formed. Okay, two green candles or two red candles. So green candle means buy in candles, red candles means sell off or sell out. Okay, so sell off candles. All right, so when you see those two, you want to mark. So whichever two you meet, that is where you are starting from. Everybody coming into the market would have to meet their own point. So which means that you can never be late. That's the truth about this sequence. Okay, you can never be late. At every time you come, you are going to watch for this. Okay, if you have not seen it yet, okay, that means you have to wait. Then, because we are using what? We are using a setup that has to do with proper sequence. Remember, when I say setup, I mean an arrangement of price movement that has to do with proper sequence, and we are using specific sequence, okay, of 0, 1, 0, and then 1, 0, 0. Remember, 1, 0, 0, 0, and then 1, 0, 0, 0, 0, because we're using specific sequence. Okay, the time frame you should set once you come in, which will now remain as your default time frame for doing this observation, is the 15 minutes time frame. So use your 15 minutes time frame for your projections of what? Your sequence of fib 0 to fib arrow, fib 0 to fib L. So back to starting point of taking your entry. Once you have got your placement of your fib 0, remember I said these are the three key points that you can use to make your $20 per day and double it. Okay, then I've also talked about how to achieve doubling it. So let's first of all repeat what we have done. Okay, looking at, we have to mark your fib 0, okay, and then mark your fib arrow and mark your fib L. So fib arrow means from fib 0 to the right hand side, the 100 pips, okay, move from fib 0 when it has not yet happened, so it's a projection. Then fib L means 100 pips from fib 0 to the left hand side. Okay, this is when it has not yet happened. So we are using a linear scale in this order, which means that you can just use your arrow line and project it. You don't need any special tool to do that, okay? Because in a linear scale, all you need are lines, right? So, but in this case, you can just use your arrow line to do that. And then not to leave imprints on your screen, okay? That is why you're not using what? The horizontal line that will remain there in future. So you just want to be able to pass one and move to the next. That is most recent, okay? So you are extending all your tools to the right hand side towards where the prices of your asset, okay, are, okay? So now when you do that, you have now marked your three key lines. These are your three key lines or call lines for your sequence observation. Remember that this points interval between fib 0 to either fib arrow or fib L are a multiplicity of what? 1 and 0. That's our constants, a multiplicity of what? 1 and 0. So from fib 0 to fib arrow is 1 0 times 10. I seen it. So 10 times of 1 and 0. That's what gives us our fib arrow if it's to the right hand side, okay? Or 1 0 times 10 if it is to the left hand side of our linear scale, because we have already inverted our chart. So we are talking left to right. We're not talking up to down. This is for sequence alignment. All right. So now that we have understood that, we have also added what? Our average prices to our major sequences. That is, our major sequences are now fib 0 to fib arrow or fib 0 to fib L. All right. So then we have added what? Average price. Average price is what? Fib 0 10 times 5. Okay. Either towards fib arrow or towards fib L. Now, you must have these two average prices drawn. So that's the middle point between fib 0 and fib arrow. You should mark it. That's 50 pips, okay, from fib 0 or 50 pips from fib arrow towards fib 0, okay? That's equal and opposite. Either 50 pips from fib 0 to fib arrow or 50 pips from what? Fib arrow to fib 0. So equal. The middle point is 50 pips. Then the same thing applies to what? Fib 0 to fib L. The middle point there is 50 pips. So that is your average price. Now, having marked your average price, you want to observe how price goes to react to this average price. That is the first thing you want to do. Okay, you have already observed the two candles that tell you whether it is a sell off or what? A buy in. All right, movement happening currently. So when you observe two green candles most recently and you draw your fib 0, okay, you mark your fib 0, now you have seen a buy in, which means that your primary projection will be towards fib arrow, because what? You observe where two green candles. If you observe two red candles as your most recent candles when you came into the market, it means that what? You'll be expecting primarily for price to do what? Move towards fib L. So you already have basic projections, but that is not enough. Okay, you must take the next action, which is to watch how price reacts to the average prices. Okay, so which means as soon as you have marked your fib arrow and your fib L, okay, and you have drawn the average prices, you will now watch the movement of price towards either direction. Now, you are not going to control any of these movements, but you are going to base your decision on them. Okay, so you are going to observe whether when price got to the average price towards fib arrow, this means that price moved towards the right hand side, okay, in your inverted screen. All right, which means that price continued in the buy in direction. Get that point? Or price moved in the direction of your green candle. So remember that. Okay, it means that that will be a first indication that the price could continue in that direction. So the first thing is for price to move in that direction. Then the next thing is for price to continue in that direction. You can't tell immediately whether there will be a continuation or there will be a rejection. All right. So, but you want to observe how price reacts to what? The average prices. So if price moves towards fib arrow and encounters the average price now will reject or break the average price the first time. If price breaks the average price the first time, it means price is targeting towards what? Fib arrow. From that point of average price down to fib 0, you will start having your entries. So there it means you are going to have buy limit entries. Okay, when you are trading towards what? Fib arrow. You have what? Buy limit entries, which means that it has confirmed to you that price is going to do what? Move towards fib arrow. Okay, that's move towards the right hand side, or move in the buy in direction, or continue in the direction of your green candles. Okay, so you are going to be interested in buying also, because you have seen that price broke what? The average price. So from the average price down to where? Your fifth zero. Okay, you are going to be buying. So that will be your new entry zone. Then your first take profit will be what? Fib arrow. So which means that you're going to have your last entry at what? Fib 0, 10 times 5. You have your first entry, okay, in that point, or at that point. So you want price to buy at that point. So let's say price has broken what? Your fib. Yes, your fib 0, 10 times 5 arrow. All right. So if price has broken it, you know you cannot buy outside that point, because it will be too close to your take profit and reduce your potential profit. So you are going to have to place a buy limit first. Now, this buy limit will remain valid if price has not reached fib arrow for the first time. That's when you are buying. If price has not reached fib arrow for the first time, that's when these entries are valid. Okay, so but you just saw price breaking you what? Your fib 0, 10 times 5 arrow. That's the average price. You will begin to place your entry as buy limit. Okay, so your buy limit will extend all the way towards your fib 0. Okay, so these first entries, you are going to use 0.01 entries again, all with what? Your 10 pips interval. 10 pips interval between what? Your fib, your entries, okay, and the next entry. So you have buy limit 1, buy limit 2, buy limit 3, buy limit 4, okay, and then you have the last entry that is towards what? Your fib 0. Then your SL will be what? 10 pips below what? Fib 0. Okay, so you have your SL at where? 10 pips below what? Fib 0. So now you now have, when I say below, what I'm saying is that price gets to fib 0 and still goes beyond fib 0 by 10 pips, because the moment price crosses back to fib 0 and breaks fib 0, you stop trading in the other direction and start trading in the new direction. Okay, so if price was coming from fib 0, or if price was coming from fib arrow, or fib 0 to fib arrow average price, and goes to break fib 0, okay, then if it continues by 10 pips from breaking fib 0 and does not reverse back to the right hand side, it means that price is going towards fib L. So you have to start selling. Do you understand? So towards fib L, you have to start selling. That's why your SL will be what? 10 pips what? After your fib 0. Okay, when price has come from, or price has broken what? Your fib 0, 10 times 5 arrow, or the average price of fib 0 to where? Your fib arrow. So that's the first thing to note. So now the next thing will be that you want to observe the behavior also on the return of price towards what? Your fib 0. So let's look at the two entries we have here. First of all, we have the sell or the buy limit entries. Now, if you place your buy limit entries and price does not return to pick your buy limit entries, you're going to have your next entry plan, which will be from where? Your fib arrow upward. Okay, so how are you going to place that? You want to see price, first of all, get to fib arrow. Okay, now at fib arrow, there are two things that are possible there. At fib arrow, price could reject fib arrow and then go down to where? Fib 0. Okay, that's the first thing that could happen there. Next thing is that price could break fib arrow and then go to what? Fib arrow times 1. Remember that. Okay, fib arrow times 1. That's the next target, which is the next sequence. So you are going to take two natural trades depending on how price behaves. So the first trade, which is very natural, is that price has just broken what? Fib arrow. So you are going to, price has just broken what? Fib 0 to fib arrow's average price. All right, they are going to place buy limits first thing, so you don't think anything other than that. Now that will depend on whether price gets to fib arrow first before coming to activate your entries. Okay, so your first expectation is that since price has moved towards fib arrow and the average price has been broken, that means price intends to go to fib arrow, but price has not reached fib arrow yet, which means you can still have your entries taken. That's why you are going to buy, because the movement towards fib arrow is a buy, okay, while the movement towards fib L is a sell. So if you choose to place your entries as given, then the order of entries will have to be, first of all, you must have your first entry at where the fib arrow, that's the average price of fib arrow, which is 50 pips from fib 0. That will be your first entry. Now you will watch how price behaves around there, around that entry. Okay, now if price does not move in the profit direction, remember that these entries based on our loss recovery blueprint, which is the 10x loss recovery blueprint, must only have 10 pips in as their SL. So each of the entries must have what 10 pips as their SL. So at that average price, you have your first entry, then you have what is SL, just 10 pips. All right. Now, having done so, if price takes out that first entry, you're going to have your second entry. Okay, second entry will be a repetition of what your first entry, that's your second entry, because you have not yet move towards fib arrow. So the first thing you are going to do is to do what? Place your fib, your entry, which is a buy stop entry now. Once the first buy limit entry has hit the 10 pips SL, you're going to repeat that entry as a buy stop entry. Now, if that entry has not been activated yet and price moves down towards fib 0, okay, then you are going to wait for price to get to fib 0, because you want to use one entry to determine the direction of price, okay, and not just push in all your entries that could affect your trade plan. All right, so now you have got first entry at what? Your average price. Then you're going to have what? Your next entry at 20 pips, because if you use your 10 pips, it will now be at the exact SL. But you're going to allow the gap, okay, between your first entry and your second entry to be what? 20 pips. That means that after the SL, there will be 10 pips from the SL for your second entry, so that you allow yourself to observe how price behaves around that zone. Okay, so when price now moves from your SL by 10 pips, okay, you're going to have your next entry there. So which means that first entry you take, haven't hit the SL, you place again your second entry. Okay, it's also having what? 10 pips SL. Now if you look at that, the first one from the average price has already gone what? You have 20 pips now to activate your second entry. All right, then from that second entry you are going to have also 20 pips to activate your third entry. If you look at that, then you now have the fourth entry will be at exactly fib 0, so that the SL of the fourth entry will now be what? 10 pips from what? Fib 0. So deviation towards fib L. That will now be what? Your final SL. It is only from that final SL that if price continues in the direction towards your fib arrow, your fib L, from that point, you begin to do what? Place your entries towards your fib L. Okay, so now the first thing is that you have taken your entries and you have observed how price behaves. If price returns, okay, let's say your second entry also hit the SL, price goes towards fib, continues to go towards fib 0, okay, third entry also hit the SL, it will meet at fib 0, and fib 0, there is already your fourth entry there, which is your last entry towards your fib arrow projection. Once price picks your what? Your fib 0 entry, you are going to repeat again your third entry. You're also going to repeat again your what? Second entry, just as you already had your first entry. So you place all of them as buy stop entries. All right, so that is how to place these entries. So now you have your buy stop entries placed, because your buy limit entries have been taken out. You know where to place your buy limit entries and where to place your buy stop entries. So when placing your buy stop entries, you are going to use your fib arrow, okay, as your first take profit. Okay, then the distance between fib arrow and then fib arrow times 1 will be what? Your full take profit, because for your 10x loss recovery, okay, you are using what? A target of what? Let's say that again, $20 per day doubled. Okay, so how to achieve that is when you have taken your first entries, which you are using starting from the minimum lot size of 0.01 for entries 1, 2, and 3, while entry 4 will be 0.05, okay, based on the minimum trading account balance for applying this, which is $100. That's the minimum trading account balance for applying this, okay. So based on the minimum trading account balance, you are using this risk management plan. 10 pips interval for your first 3 entries, even your fourth entry, but you're starting with the minimum lot size, okay. So for every $100, you are starting with what? 0.01 for your first 3 entries, okay, then 0.05 for your fourth entry, which means that if you are trading $200, you are going to multiply by 2, okay, the lot sizes you are using. If you are trading $300, you are going to multiply by 3, okay. So if you can understand that, that means for $100 you are using first entry set, which will be your limit orders will be what? Your 0.01 first 3 entries, and then 0.05 your third and or your fourth entry, which is your last entry closest to your level, okay, or your fifth zero. Then you do the same thing when repeating the entries as top orders if they were taken out. So this is a plan now. So if all entries are taken out first as limit orders, okay, then when repeating the stop orders, you are going to now multiply, okay, you're going to multiply their lot sizes by 2. So your fourth entry will turn to be your first entry. Multiply by 2, you use 0.10. Okay. The other ones will now use 0.02. That is your 10x recovery plan. It means that when the market take 10 pips from you, you are targeting taking what? 10 times of that 10 pips it has taken from you. That's the simple logic of it. Maintaining the same what? 50 pips first take profit at fib arrow when trading towards fib arrow, or when trading towards fib L. Remember that fib L is just the opposite of fib arrow, okay. Left hand is the opposite of the right hand side. Do you understand that? So which means the left hand side is when you are selling, the right hand side is when you are buying. So the next thing is to trade from fib 0 to fib L, okay. Exactly the same thing. You don't want to just rush in. You want to see how price will react to the average price towards what? Your fib L. After that rejection of the average price, then you can now begin to trade, okay. So if there was a rejection, there is a different trading plan than if there was a break. So if there was a rejection, it means that you are going to trade towards fib 0, and when you are trading towards fib 0, it means you spread your entries towards fib L, okay, and that will give you all your entry just as you did towards fib 0. Exactly the same plan. So if price rejected your fib 0, sorry, if price rejected the average price towards fib L, it means that from your average price towards fib L, you're going to have your first entry, okay, then your last entry will be at fib L. That means you are going to expect what? To buy. So instead of selling now, you're going to expect what? To buy, because you have seen what? You have seen a rejection of the average price. The same thing applies to if the movement was towards what? Fib arrow, and price rejected what? The average price. It means that you're going to start selling, okay. So you will sell from the average price towards fib arrow. So your last entry will be at fib arrow, projecting that price will return towards fib 0, okay, and then from fib 0 price will also break fib 0 and return towards fib L. So you will have more than 50 pips projection. So which means that your last entry from fib 0, from fib arrow, will be targeting 100 pips take profit at fib 0. The same thing will apply if you are taking a buy entry, okay. So your last entry at fib L will be 100 pips towards what? Fib arrow. Okay, so this is how to trade this and achieve $20 per day with the 10x loss recovery blueprints.
I am Francis Bestman, the owner of CMF Financial Education Initiative and also Power 40 Scientific Trading School, as well as the founder of Power 40 Street Funding. Thank you for joining me.